this video, I'm going to break down exactly how I went from struggling to become profitable to being a consistently profitable trader, catching large moves in the market pretty much each and every day. You don't need MACD, RSI, any of the oscillators, any of that stuff. All it's going to do is make you overthink each and every trade because you're going to have disconcerting signals from one indicator, and then you're going to have a setup that looks like it should be on the other indicator. You don't want that. You want to have your decision making as clean and precise as possible when you're trading. Because let's face it, trading is hard enough as it is, and if you have all these other extra mixed signals, it's just going to make it that much harder. Over here on the left, I have my TopstepX platform pulled up. And as you can see, all I have is VWAP and custom supply and demand levels that I plotted just based off of the pre-market action. Now, the mistake a lot of traders make is they don't look over to the left and see weekly key levels. So where did the market reject from yesterday or over the last 7 days, and where did it bounce from? Those are key crucial levels that are going to come into play pretty much each and every trading day. And those levels by themselves can keep you from getting trapped into a long or a short that's going to immediately reverse on you because you're aware that there was previous interactions, either supply or demand, in those levels that you're approaching. Now, it's one thing to talk about it, but if we zoom in, we can see that play out perfectly. This morning, we had a previous rejection at that 25,100 that we eventually reclaimed and started to turn into support. If you tried to short within the first 15 minutes of the market, you likely did not have that zone plotted because you know that we had indication of buying at that level. Also note that using the 5-minute chart, we did not have a single close below VWAP once the market opened. Every time price dropped below VWAP, it got bought back up by the buyers, indicating strength. Last thing to note is look at how strong the buying volume was in the pre-market, and then notice how it picked back up right after that first 5-minute candle of the open. And then the last piece of confluence that nobody talks about is the VVIX or the VIX. This is the volatility index, meaning if the VIX is going down exponentially, most of the time the market is going to go up. So that added confluence of the second 5-minute candle starting to show weakness in the VIX gave me that extra added confidence that this was a great setup to target the highs. Unfortunately, a lot of new traders make the mistake where they will keep trying to short on days like this, but if you look at the VVIX or the VIX itself and you see it drastically decreasing, this is a warning sign, basically holding up a banner saying, do not try to short. It will be very clear and obvious when a short opportunity arises because you'll start to see the VIX head back in the opposite direction aggressively. For example, you're starting to see on the right side of the screen over here some bullish momentum starting to come in on the VVIX. And if we fast forward this to later in the day, that was a clear indication that the market momentum was starting to switch. And that's when I would start looking for a short. Those rejections came right around the Sunday's futures open. So that's why I'm always talking about key supply and demand on the weekly levels where the open price is and watching VVIX. This, time and time again, keeps me from making trades on the wrong side of the market, and it offers a huge risk to reward. So if you like this style of content and you have any questions at all, definitely drop them down below and make sure you like and subscribe to this channel. I'm just going to continue putting out hopefully weekly videos on how I trade and diving deep into price action concepts that will actually make you a better trader. No course, nothing for sale, no indicators, just genuinely trying to build a community of solid traders. Now, most people probably have closed out of this video already. Not many people watch the long form content, and honestly, that's probably why a lot of the traders are struggling. Is patience is a virtue that not many people have these days, but that's where you actually make the money in trading. Really good trading is sitting on your hands and knowing when to execute and when to stay out of the markets. With that being said, the very last tip I will leave you guys with is notice how we always get a bounce right around that VWAP area. Having VWAP on the chart allows you to avoid getting faked out in a short in that area, because if you tried to short right around that 70 level and didn't know VWAP is there, you would immediately be caught in a 30 or 35 point losing trade. Now, this is not a buy every time price gets to VWAP kind of thing. It's more of, if you were short, I would be looking to get out of my trade right around that VWAP area, because I know buyers are likely to step back in. As you'll see later in the day, that can also offer a great short opportunity. If you break through VWAP and then you wick back up and you retest it, you're likely to head back down to the low of the day. So in summary, the VVIX or the VIX can help you identify the overall market momentum. Key levels from the week or the pre-market can play out as good key support and resistance intraday, and knowing where the VWAP is can prevent you from getting caught in a bounce or getting long into a rejection.